Gold's price appears to have relatively stabilized, yet with key events occurring and the ongoing geopolitical tensions, that picture could quickly change. In today's report, we intend to have a look at the upcoming release of the US employment data and geopolitical issues in the Middle East, all on a fundamental level for the gold market. For a rounder view, we conclude the report with a technical analysis of gold's 4-hour chart. The US employment data for November is set to be released this Friday, and as always, the NFP and unemployment rate may take center stage. The expectations by economists are for the non-farm payroll figure to come in at 202K, vastly exceeding last month's disappointing figure of 12K, and for the unemployment rate to tick up to 4.2% from 4.1%. Setting aside the NFP figure, the expected uptick in the unemployment rate may amplify calls for the Fed to cut interest rates in their last meeting of the year, as it may imply a loosening labor market. Yet we would like to stress that a mere of 0.1% uptick in the unemployment rate does not necessitate a collapse of the US labor market. However, should the unemployment rate come in as expected, it could weigh on the dollar for the aforementioned reasons. On the other hand, should the NFP figure vastly exceed expectations, it could potentially mitigate the bearish implications on the dollar, as it may counter the argument of a loosening US labor market. Overall, the final employment data for the year may set the tone heading into next year, and thus any deviations in their positive or negative implications on the dollar may be amplified by market participants. Geopolitical tensions may be slightly easing between Israel and Hezbollah following the ceasefire deal, yet in other parts of the Middle East, tensions are rising. In particular, tensions are increasing in Syria, where rebel forces backed by Turkey made significant gains over the weekend, which saw Aleppo and its surrounding regions being taken by the rebel forces from the Assad regime. Moreover, the Kurdish forces have also decided to take advantage of the Syrian army's disorganization and have also made gains and captured territory. The vested interest from Turkey, Iran, Russia, Israel, and the US in the region may be of a great concern as the proxy war heats up. Therefore, should we see a more active involvement by foreign nations, it may further increase geopolitical tensions in the region, and thus may funnel safe haven inflows into gold, which in turn may aid its price. In conclusion, the recent developments in Syria could lead to numerous nations being pitted against each other in their attempt to garner influence in the region. Thus, such an escalation in our view could aid gold's price. On the flip side, should we see agreements between the power brokers in the region, it may have the opposite effect on gold's price. On a technical level, gold's price appears to be moving in a sideways fashion, as seen by the sideways moving channel, which was incepted on the 25th of November. We opt for a sideways bias for gold's price, and supporting our case is the RSI indicator below our chart, which currently registers a figure near 50, implying a neutral market sentiment in addition to the aforementioned sideways moving channel. For our sideways bias to be maintained, we would require the precious metals price to remain confined between the 2,620 support level and the 2,665 resistance line. On the flip side, for a bullish outlook, we would require a clear break above the 2,665 resistance line, with the next possible target for the bulls being the 2,705 resistance ceiling. Lastly, for a bearish outlook, we would require a clear break below the 2,620 support line, with the next possible target for the bears being the 2,580 support level. Those were the top financial stories for this hour. From all of us here at IronFX, we